Welcome, my name is Thomas and I'm here to talk about in this video tax reform for individuals dealing with Schedule 1. And Schedule 1 is dealing with additional income and adjustments income. And if you're familiar with the 1040 from last year, they just simply took out the first page of income and adjustments and called it Schedule 1. And so that's what the new tax reform is about. They basically just broke down the 1040 from 2017 and pulled out each section and renamed it and gave some new requirements and things of that nature under the individual reform for 2018 and the 2019 season. And so I'm basically going to be covering some most common incomes and adjustments that we deal with far as our clientele in the Midwest city of Chicago, where we do business at. And where you may be doing business, and the type of clientele you deal with may vary slightly based on your experience and demographics and skill sets, et cetera, et cetera. So in this video, we're going over Schedule 1, adjustments income, which is just the top half. We're going to deal with line 10, taxable refunds, credits, and offsets of state and local income taxes. The most common one for line 10 would be for people who were itemizing prior to the new tax reform. They would have to put down how much state income tax they received, which would go on line 10. So that was the most common use of line 10 for the most part. And then line 11 is alimony received. That's one of those incomes that you really have to ask the client, do they receive? Because a lot of times, based on experience or lack of experience, alimony would be something you probably normally ask a woman if she's receiving as far as income and filing more income tax returns. But the more I've been in this industry for the last 18 years, the last 12 as a business owner, the more I have to realize that I have to cover all bases when it comes to income, And so line 12 is for business income and loss, Schedule C or Schedule C easy. And that's for most people who are self-employed individuals like barbers and stylists and welders and contractors and small business owners who are non-incorporated. They'll go on to Schedule C, and line 12 is for that. So for people who you do clients tax returns who fall under Schedule C, a lot of them not going to really be affected by the new tax reform when it comes to the qualified business income deduction. A lot of individuals won't even qualify for that, and so the way we calculate the return will basically still stay the same, and life will keep on going. You know, that's only will play a role for people who make $157,500. You know, that will be able to utilize that particular deduction when it comes to tax reform for this year. When it comes to line 13, capital gains and losses, Schedule D, the most common use of Schedule D you might see is a person who may have some stocks from a company that they sold, or they may have sold a house that had a capital gains on it. So, you know, that's what the Schedule D is all about. And 16A is reserved, but normally 16A and 16B was for people who received retirement income. So if you receive a 1099 R from being retired, you would normally go on that line. 17 is rental income. That's the most common use of 17. And you can see partnerships and corporations, because those entities' income passes through to the 1040. So those are the three common uses of line 17: people who rent a property, partnerships whose income passes through to the 1040, as well as S corporations whose income passes through to the 1040 or loss. And so that's what line 17 is really all about. 18 is farm income or loss. Haven't had a chance to do a farm yet. Looking forward to that one day. 19, we all know and love, is unemployment 1099-G. 20A is normally Social Security benefits. So on the 1040 for 17, 20A would be Social Security benefits. 21 was other income, and mainly the most common uses of that would be a 1099 miscellaneous, box 3, and cancellation of debt would go on line 21 as well. So those two most common forms of line 21 that you will run across, or what that I've run across in my 18-year career in income tax preparation industry. And then the next column is 17. The next column is adjusted gross adjustments to income. So that's the next column that we're dealing with. So line 23 is educator expense. So teachers and professors who pay for certain expenses out of pocket that don't get reimbursed, they can write up to $250 off on that. Line 25 is health savings account deduction, and that's a account that people would have that they can utilize a deduction for. Line 26 was moving expense. Moving expense has only been wiped away for 2018 to 2025, but you still have people who might not file a return for 17 or 16 or 15, where moving expenses were still in place. So you still need to know that moving expenses is valid for years prior to the new tax reform that takes away moving expenses. And moving expenses generally was associated with people who moved from one place to another connected to a new job. And they had certain requirements that you had to meet. That's mainly, you had to be 50 miles or more, and you had a time requirement that was embedded in that. And so that's how that worked, Form 3903. Then we have 27, which is deductible part of self-employment, Schedule SE, which is self-employment tax. And mainly when you're filling out the Schedule C, for people who have a net profit or net income, you would generate an SE form either by software or either by doing them by hand. Depends on how you would prepare the return. 28 would be self-employed, simple and qualified plans. These plans are for people who strictly may be self-employed to work for themselves, or may even work a job who just don't have any benefits at all. And so you need to have your own retirement plan for yourself, being strictly self-employed and maybe working a job that doesn't have any benefits whatsoever. And so that's how that works. And 29 is self-employed health insurance deduction. So if you're truly self-employed again, and you may also work a job that has no benefit packages whatsoever, that includes nothing, then you still have to have your own health insurance plan that's going to protect you and your family for going forward in life. And then 31A is alimony paid. So for people who paid alimony, they was able to write off that amount, and the person who received it had to report that as income. 33 is student loan interest deduction. So for people paying back student loans, the interest that they were paying back over the course of the year, they would receive a statement called a 1098E that they will bring into their tax preparer along with all the other income and deductions to be prepared on the tax return to see what total results they may walk away with. And so that's how the breakdown goes for Schedule 1, additional income and adjustments to income, which simply, if you got a 1040 for 2017, you can put them side by side and see how it matches up when it comes to the front pages of the income and adjustments of income for 2017. And how, if you go through Schedules 1 through 6, how they simply just snatched out each section and renamed it and made it part of the new tax reform with some other requirements and changes that affects individuals as well as businesses going forward for 2018 to 2025. And so that's what's covered inside this video for my income tax students and people that's part of the income tax staff that I work with inside of Chicago and as well as Indiana, as well as going. We're about to start in Minnesota next year in 2020, and we'll be getting ready in the summer of 2019 for that by going to Minnesota and getting the place ready and things of that nature. So again, tax reform, Schedule 1, those are the basic common things that we deal with in the course of us being in the industry as long as we have, that we run across. And I'll see you in the next video.